Ladies and gentlemen, Kim here. Welcome to the market update, the weekend analysis. Hope you guys had a good day trading today. Hope you guys had a good week. Looking forward to the weekend. So it looks like market is pretty much flat today. You can see on the S&P, it's pretty much flat today. Market was up as much as like 0.6% or something like that. Came down towards the end of the hour. Closed the day flat. I think Nasdaq's down about 0.5%. Dow down about 0.3%. I think we did see small caps green today, and the banks pretty much flat. So kind of a flat day today. It was a slightly up, came down a little bit towards the end of the day. Pretty much flat day today. So as I promised on the daily update video last night, we're gonna look at some stocks as well. Let's do FAANGT stocks, right? FAANGT stocks. That's Facebook, Apple, Amazon, Netflix, Google, and Tesla. So I do these daily videos Monday through Thursday, looking at S&P 65-minute chart. On the weekend, on Friday night, we'll do these market update weekend analysis, where I'll go through a little bit more extensive analysis. So we'll be looking at a little bit more tickers today. So hopefully I can get through them and not be too long on this video. So I think at this point, I think a lot of people are wondering, is this a good level that, because we cultivated that higher high we talked about last week. Are we cultivating here these higher lows in the short term to continue higher and make new all-time highs? Or is there going to be some kind of a shenanigan before the election, this thing potentially seeing much steeper decline? I think overall there's still a lot of fear, despite the fact that we've already made a new all-time highs here on the S&P, right? We made new all-time highs, pretty much made new all-time highs on all the indices. I think except Dow, except the small caps. I did notice this week that the transport, right? Dow Jones transportation average made new all-time highs. That was one of the indices that was lagging quite a bit. So we got Dow and the small caps still lagging, haven't made new all-time highs, but pretty much all the indices, S&P, Nasdaq, semiconductor, Dow very close though, and transportation average. So they're all kind of catching up there. But despite the fact that we already made new all-time highs after a steep decline in March after COVID incident, I think overall census is that most people are still very much fearful of this market, and that's kind of what I see, in the overall market, and that's kind of what I feel psychologically. And also, if you look at the investor survey, it increased a little bit with the recent move. But I remember at one point there were only like 25% being bullish, back in September, and that kind of number is something you see in a steep correction. But anyway, let's try to figure out what we can expect going into next week, and it is all coming up right now. So let's start with the 65-minute chart follow up here from what we've been talking about yesterday. So let's kind of look at this, what happened today. So it looks like you can see here, this is where we closed yesterday. We talked about on the last night's video, the best solution for the buyers is gapping up, because there was this gap down that happened yesterday. There was a 1% gap down, and then bulls march higher every single hour, pretty much fill that gap. And then when the gap gets filled, it usually acts as resistance. So it would have been best if the buyers gap it up. They did that. They gapped up here slightly, continued to march higher, came all the way back to this level here, right? That was kind of the prior pivot. And and then that's the first hour, second hour, third hour. We pull back second and third hour. We found support on my short-term moving average on the fourth hour. We continued on the fifth hour. We puked on the sixth hour. We came down, and then gap got filled, right? Gap did get filled here. That gap that opened up from today. So despite the fact that we did see a puke towards the end of the hour today, it's actually better that it went up and came down. Did you know that? It would have been worse. Can you imagine this thing actually finding resistance here when the gap got filled from yesterday's gap down and would have started came down like this? It's better. Why is that better? Because think about this. This gap just got filled. And a lot of times when the gap gets filled, it does act as support. We don't know that yet as of today because we did see the gap getting filled. We're right on that pivot now. You can see right here, and that's an important pivot right here. Right? That's this level, this level, this level, this level. So we don't know for sure if this level is going to act as support or not going into next week. All we know is we fill that gap. And in normal circumstances, right, when the gap gets filled, it does act as support. You can see right here, this gap got filled. That was a gap. That got filled, and then we marched higher. And then we gapped up, and then came down, filled that gap. Again, it's better for the buyers to gap it up and pulling back because that's kind of, you can look at that as a high and potentially markets pulling back as high or low. It's better that way versus you would have just came back down and came back down here. So right now what we're dealing with is that falling resistance. There's a short-term falling resistance there and kind of a short to mid-term support here. And that's kind of where the market is sandwiched in between. So we're right in this level. I think, going into next week, for this market to start looking bullish in the short term, this is a swing high it needs to reclaim and clear. And so I'll put that up right there. That's 350. So now we have a well-defined high that it needs to break above it. What the bears are going to argue is, well, that's a lower high there. That's definitely could be a lower high. We just don't have a lower low yet. For the lower low to happen, this needs to come down and cultivate lower low, breaking below this low. But keep in mind though, if I zoom out a little bit, as you can see here, in the longer term picture, in the midterm, buyers have been already cultivating higher lows. You see that? And higher highs, right? In the midterm. Not to mention the important pivot right here, right? That important pivot, this pivot right here. I don't like that circle. Yeah, so important pivot right here, right? That was the level that buyers really needed to get above because, when we saw the September correction, I think that was a 10-12% correction. This is where these lower highs, what made it possible, and we plunged after that. So looking at things a longer term picture, we actually broke above it. So with that, now you can see in the midterm, we actually have a higher high. We got the low, looking at bigger picture here, we got the higher high, higher lows, potentially higher low here. So overall perspective, we're still in an uptrend. In the midterm, we're bullish. Only difficult thing that we can try to figure out is in the short term, because in the short term, if the market would have kept up and closed above my short-term moving average here today, we didn't see this. Let's say if the market closed the day like this, looking like that, I would say short-term bullish. If that's how market closed today. The fact that market didn't close there and closed below my short-term moving average, and it filled the gap though, so I still can't give it fully bullish in the short term. I'm still going to stick with my neutral stance in the short term. I can't quite give it bullish yet until it hit 350, hit above 350. Then at the time, I will be bullish in the short term. But definitely in the midterm, we're bullish. We got these higher lows here and higher highs. And those are pretty definitive higher highs and higher lows. If bears want to argue that this is a lower high, we don't know it yet. If that's going to become a lower high, we need lower low. For that to happen, you need to go through this support. We already feel the gaps. A lot of times that's going to act as support unless there's a gap down. What bears want to see is a gap down to not even deal with that fence. Need a gap down. If there's no gap down on Monday, buyers going to try to bring it back up there. So we got that support. And then not only that, we got the 342 support, which is a strong support we talked about on the last weekend video. And you can see when this thing came down, even that with that 1%, that was a pretty sizable gap down. That's a 1% gap down. Guess where we found support? Right on that 342, right? We bounced from that. So not only you need to go through this support, gap support, or that, there's gap, and then the prior pivot support, and I have my midterm moving average residing at 343 now and still rising. Keep in mind, my midterm moving average does have a pretty impressive resume entire month of October. Every single time when my midterm moving average was retested, market did see a bullish move to the upside. So something that I've taught you guys before, when we're in an overall uptrend, it's important that you don't react emotionally just because we see couple hours of downturn. We saw a couple hours downturn here. We saw that's a 2% gap down here. Market got back up. That's a 2% down, 2 hours of 2% down shenanigan there. Market got up, right? And that's all happened when my midterm moving average is start rising here. So we're way up here. We're not even near my midterm moving average after market has already, right, cultivated higher highs and higher lows and breaking up a very, very important 342 pivot. We want to give benefit of the doubt to the buyers in the overall picture, especially in the midterm. Just right now in the short term, there's some up and down stuff going on, right? And I will label this market bullish in the short term if it can get above 350 and hold above it. Until then, I'm going to continue to I'm going to label it neutral as long as it stays above this support there. If we start breaking below that, coming back down to like 342, maybe a little bit more bearish at the time in the short term, maybe neutral to bearish or something like that. But because of midterm moving average there is a little bit more neutral to bearish in the short term, but bullish in the long term. But we're kind of staying up here. Gap just got filled. That's going to act as support on Monday unless there's a gap down. Let's go to daily chart here. So looking at the daily chart on the S&P, not a whole lot is happening, right? It's just different feel when you look at the daily chart because now we're looking at much longer term here. So much longer term picture is definitely we're still in an overall bullish trending market, right? Not only that, this was an important pivot. We cleared of it, right? So with that, we got higher high also in the short term. So looking at the daily chart, it looks much more bullish despite the fact that a little bit of a plunge on the last hour today. It's not even a little blip today. It's not a huge deal as far as chart is concerned because we're holding. You see that my short-term moving average on the daily, we're still holding above that. And 342, 338 here, 342, 338.79 is important level. And there's a gap there also. There's a 3 gaps, and those are, still open. And so I have to continue to give benefit of the doubt to the buyers in the overall picture. When I look at these daily chart, everything looks bullish. Again, despite the fact that we did see a little bit of red towards the end of the day today, I think that's not a whole lot of deal at this point until the price start getting to 340 to 338, start breaching below that. As long as we stay above 340 to 338, I want to continue to give benefit of the doubt to the buyers. I won't be surprised. There might be a chance that this market maybe come down to retest or something like that, but I won't be surprised this market continue higher next week and fill this gap quickly. Let's go to VIX. So VIX popped a little bit. That's exactly what we talked about. Yes, last Friday, right? We talked about how, you know, because last Friday it looked like this. That's what it looked like right here. So if you put your pivot or support level too tightly, you would have looked at that as kind of a breakdown on the VIX, and you would have thought that that's going to be a breakout on the indices. Well, you know what happened? That's kind of what it does. You know, you can see we actually got back up to about 29 there. That's what this market does. When you think this market is up, there you go, VIX breaking down, and that at the time that was when SPDR was breaking up. And then as soon as that happened, market just got right, or the VIX got right back up, S&P came right back down, right? And this is how this market is going to continue to fool you, right? If you don't understand how to read charts correctly, there's so many these kind of traps, you know, along the way. And that's why if you're way too focused on the short-term fluctuations, market is great at fooling you almost every single time. So you kind of want to understand it's not a bad thing to analyzing the short term. You first have to understand the midterm, the long term, then the major macro terms and all of that. So looking at VIX is still elevated. It's crazy how VIX is still hanging around. We're not seeing VIX completely tanking to the downside or completely getting into downtrend. I mean, this is definitely a downtrend. You can see with the lower highs and lower lows here. Here, we're moving sideways. And that could be either way. I mean, we're not sure how that's going to turn out at this point. You know, S&P looks bullish, and looking at more of a midterm perspective, you can see we got lower highs on the VIX, and we got this gap still hasn't been filled. This gap still open there. So I mean, there's a chance that VIX is, you know, trying to come back down to fill that gap with that lower highs in the midterm, but in the short term of things, we're just been moving sideways here. And every time when VIX gets kind of a sideways move, things can get tricky. Either we make a pop or come back down, you know. But I think overall, let's see. I was trying to figure out if there's any kind of a similar price action, but yeah, I can't really find, especially after a big pop, you know, because VIX actually popped up hard, you know, and then it came. I mean, I think this might be similar, like here. So you see how there's a gap. That's a pretty similar. So that's a gap. You see that there's a gap, and then there's some sideways action here. See that? There's some sideways action. It popped, but it came right back in and finally filling the gap here though. So something like that could be brewing on the VIX, where it could pop up a little bit, but could come right back down, kind of like taking money from both direction. Right, so you can see right here, I think what could happen is, you look at that. So that was a trap, and then what could happen is we could have another trap to the upside and then falling right back in. So that's a trap to the upside on VIX. That's a trap to the downside on VIX, and then finally coming back down to you know, potentially filling that gap that was open. I think this was open what? Oh, this was open back in that was a COVID move there. And that hasn't been filled. I think sooner or later that's going to get filled. So keep in mind, we might see some kind of shenanigan up and down going into the election, just kind of looking at the VIX there. And SPDR also seems like there might not be a smooth move to the upside. Might be. I mean, it looks like it's deceptive how the market is a lot of times. It looks like it should be a very smooth move to the upside. But even right here, it looked like it's supposed to be smooth right here. You see how that neckline was taken out, but it actually wasn't. There's some lot of up and down move here before we made a smooth move. That's kind of always, that's how the market usually does. You mean, even back in April here, after breaking some of these levels, it wasn't smooth at all. I mean, it got above all my moving averages, but there's a lot of up and downs. And then it actually faked a lot of people out. Do you guys remember back in April or May? I remember a lot of people are looking at this as a double top. I remember just fake people out right here. This right there, you know, that faked a lot of people. Because at one point, this was here. Let me go to line chart. Oh, you can't really see in line chart because line chart only gives you the closing price. So this is a neckline. And then what happened was during the intraday, you see that lower wick. So, I mean, there's still a lot of fear back in May. I mean, there was when the economical data, the COVID numbers, people are tweeting, talking about sharing that COVID numbers increasing every single day and just turning on TV, horrendous news coming out every day. The unemployment rate is worse than 1929. I mean, that was that. And then people are talking about this double top. And then, you know, we start coming down pretty hard. And then on this day, intraday, that thing came down, trapped a lot of people there. And especially there's a gap here also. But that was the low. That was at 270. And then you can see how it went up. And that went to 320. That was a June rally there. So that's kind of how the market works. It's going to shake things out in the short term. So if you're way too concerned about the short term movement, you're bound to get faked out. You're bound to get, you know, fooled by the market. And I think we may see some more of that. I mean, overall perspective on the S&P, it looks bullish, obviously. Same with the VIX. When you look at the overall perspective, it looks bearish in the VIX with the lower highs and coming down and the gap still open, probably going to come down, fill that gap. But I wouldn't be surprised that it's not going to come down easy. It's going to give you that fake and it's going to go up, give you that fake, and then possibly coming down. Let's look at Facebook here. So Facebook, I drawn this rising pivot. It actually looks much more well connected if you actually do it on the weekly chart, because I actually saw this on the weekly first. But if you look at it on the weekly, it's actually very well connected rising pivot. But nonetheless, it is, because there's a prior resistance. You can see there, and then became support, right? And then you can see we're holding above it. So a lot of times these rising pivots, they're important because when the trend is, you know, when we see a correction and then the market moves up here and then we get, instead of, because you can see how it struggles get above that pivot and then it tanked. That's a COVID decline. It got up to retest. It is no coincidence. We're slowed down there. That's definitely the resistance, right? And then we pull back, but instead of coming all the way down, we stop short. We challenge it one more time. Finally broke out, right, with the nice gap. Well, there's actually pretty decent gap. That's actually a pretty decent gap right there. And that gap remains open. That's a good thing. That's a good thing. And then now we're staying above it. So in the overall perspective, this is a bullish price action on Facebook. What I'm going to do is I'm going to actually put these two levels there because that's an important pivot coinciding with the gap area, 248, 233. That's a rising pivot right there, coinciding with those the gap area there. My long-term moving average residing right underneath that. So it's a very, very important pivot right here, right? As long as Facebook stay above 346, 338, I have to continue to expect higher moves to the upside on Facebook. Let's go to Apple. Apple is similar. This is similar rising pivot, right? You know, you see that we go up, straw comes back down, we go up, comes back down, we go up, comes back down, we go up, comes back down, but not a lot. We come down just a little bit, we gap up, just like how Facebook did, and there's a gap here, this important gap, right? And then we thrive, comes back down to where? That's not a coincidence. It's not a mistake. We came down right to this level, just right on the dot, right? And then we bounce from there. So what I'm going to do, just like I did on the Facebook, I'm going to put this here, right? So 101.96-ish level there is important pivot. That gap area coinciding with the rising pivot. So you got that rising pivot, very well defined rising pivot right on the dot every single time. And then that's a level coinciding with the gap that made this possible, right? Made this move possible with what? Gap up. What I call a gap up on the fans? Jumping over the fence, right? Because this is definitely important pivot, right? This is important pivot. And it was struggling just beneath that. What did it do? Gapped it up. Gapped it, jumped over that fence. Don't want to deal with that resistance because it knows a lot of time it did that, boom. It did that, boom. Struggle, and you tanked. So this time we gapped that up, made a big soar, came back down to retest. The more times the pivot gets retested like this, the stronger it becomes. So looking at that here in the long-term overall picture on Apple, as long as price is above 101, we're back at 119. That gap was getting filled here. Actually, that little gap is still open, right? Partially open. That small gap's partially open, but looking at a longer term picture, as long as we stay above these pivots, worst case scenario 101, above 196, we would have to continue to be bullish on Apple. You can see my longer term moving average is also residing just guarding this level right here, just guarding that level, that longer term moving average there. Again, that's a gap area, pivot, and we're up here at 120, 119, and we're still, just below that move, that gap area. I can probably put in short-term support for you guys. Here, let's tighten this up, like there, right there. So so Apple, this gap is actually still open, and that's a good sign for the buyers. Not to mention we got in the short term, we got these higher lows and higher highs. So short term looks bullish, mid-term looks bullish on Apple, long term looks bullish, right? And so you want to continue to be bullish in this stock. And short term, you want to hold above 116. Long term, mid-term, you want to hold about 111. But on the longer term, as long as we stay above 196, should be bullish. But right now, we got pretty good momentum there with the higher lows and higher highs. We want to continue to give benefit of the doubt to the buyers. Excuse me. All right, let's move on to Amazon. Similar scenario. It's a little bit not as clean as Apple or Facebook, right? It's not as clean as Apple and Facebook. So we got this pivot, right? And then we got pivot from here. So that works. That's the prior resistance. Some of the resistance here, and then a support. And I drew the blue dotted line where it comes from this resistance here, here, and here. So that's the rising pivot there. We saw a nice up move, pulling back to retest it, and then bounced. And right now, you can see we did see a big decline, but saw some buyers came back up. The gap got filled. My short-term moving average here and here. So let's see. I think what I will do, I'll give you this level. I'll give you these two levels here, I think. So I think if we stay above, it's a little bit more broad level, but I think the long-term picture, we stay above 2887 and 2680. I think that's going to be an important pivot right there to hold above that. My longer-term average is hanging around at 2887. But in the short term of things, here, let's zoom in here. You can see that we already got higher lows, higher highs. If I go to line chart, you can see definitely holding above this neckline here, right? So we did see some up, long lower wick on the candle with that, but the way it closed, it is no mistake that it closed right above this neckline right there. We closed right above it. Why? We're still cultivating higher lows and higher highs in the short term, right? So I think in the short term, right, going into next week, we hold above 32, 20. Let's continue to be bullish on that. If we lose that, we got midterm moving average there at 31.37 and the rising pivot in that vicinity. Definitely want to hold above these levels in the long-term picture. Let's go to Netflix. So Netflix, let's zoom out first. Look at a longer-term picture. So that's that pivot. Similar to Facebook and Apple. That's that pivot there, right? That's a rising pivot. You can see how it's been acting as resistance, 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 resistance. We broke above it and then now acting as support. Definitely a rising pivot there. And, you know, looks like it's been struggling here, right? Kind of a potentially what it looks like is triple top. So a lot of times what people like to do is when they look at some of the, what you have to understand is you have to look at a bigger picture first before you start calling this as true. And it can very well be, but I've seen these kind of signals fail so much, especially on the market. Just, you know, when Netflix just broke out on multi-year base. Just broke out of this multi-year base. That's a really, really nice digestion, right? That's a good, consolidation after a nice move, and it took a couple years. I mean, how many? Several years of, rest before making a move. I think when you look at the overall picture, I wouldn't really look at that as a double, triple top that is going to kill everything. I'll look at this more of a consolidation pattern before going higher. But tricky part is when you see something like this, sometimes it comes down to retest. Sometimes we hang around a little bit here and then get up. It's very difficult to determine that perfect level before it's going to break out. I've also seen sometimes it will go down, make new low, just freaking everybody out, and then go right back up. Sometimes it will do this, come down a little bit, go right back up. People think that's a breakout, come right back and go right back up. So every time when there's certain level that is too prominent, just know that sometimes it will give you a clean breakout where it'll break out and it will never stop. More often than not, be careful trying to, time the breakout perfectly. It will give you some head fakes and things like that. I won't be surprised to see that. But overall, I want to be bullish on Netflix. And here, I actually was going to find some kind of a example. I don't know if I can find any. Yeah, I don't know if I can find. Yeah, I don't know. I can find. I don't know. Maybe some people call that a triple top or something. After. Yeah. So if this is not really similar, but think about this one. So you can see that. You can see that how this thing was like. In this base. This was back in 2015 and 17. It was in this base for multi-year, and then we actually broke out of it. And then it actually looks like some kind of a triple top or head and shoulder formation, right? And you can see if I actually zoom in here, right there. So right there. So what it did was there. So when you looked at this on Netflix, we had a big move. We did. And then it looks like left shoulder, head, right shoulder, neckline, very well defined neckline right there. So this is how the market is going to get you, right? Just because you saw some kind of a pattern doesn't mean you're a chart master. Actually, it's going to deceive you, right? The more people recognize certain patterns, market is great at making sure those people get faked out. I think I even remember because I think I was trading Netflix back in 2007 April. So a lot of people are looking at this as potentially a topping pattern. Especially we had a gap here, right? And we gapped up. We already had a big bullish run here. And so, when the stock wasn't really going anywhere, kind of moving sideways, elevated after a big bullish run, A lot of people are very, very anxious about it, very nervous about this, especially when you can draw, you know, let's see here. Let's go this one. When you can draw a perfect neckline like that. So here, so looking at this like this, you can see that, okay, you don't feel too bad. What a lot of people are going to say is, okay, yeah, this looks like a left shoulder, head, right shoulder, right? Left shoulder, head, right shoulder. And you draw that neckline and you tell yourself, as long as we stay above my midterm moving average right there, we stay above that level, it's bullish. And then what happened the next day? Boom. We lose that. People start freaking out here. So some people might even think that that's a topping pattern. That's the head and shoulder getting confirmed. Maybe a triple top. Netflix is going to go down to 100, 120 or something like that. A lot of shorts get short here. Maybe, you know, waiting to add on a little bounce. Or longs get stopped out or whatever. And then we get a little bit of bounce like this. And people think that, oh, that's just a, you know, bear flag. And then what happened? Boom. Right? And then can continue to move higher. Look at that. And then continue to move higher. It's because a lot of people are looking at, pay too much attention to short-term fluctuations. And you thought that Netflix can't go any higher after it made a move from 84 to 140. That's why you have to understand the context. Keep in mind, it's been in this range. It took its time to digest its gains. It consolidated for 2-3 years. It had enough energy to continue higher. And that's kind of what I mean. And look at this thing. I mean, this thing just skyrocketed. While you're just, you know, overanalyzing down here, you completely missed your entry and you just completely missed out. Now, look at things big picture again. Okay, now very similar. It's multi-year base. We broke out. Looks like what is like triple top, right? I won't be surprised. I'm not going to be calling this a topping pattern. I won't even be surprised, let's say if this thing comes all the way back down, make slight low, get everybody all riled up. There you go. Netflix breaking down. This is going to crash back down to 350, right? And then this thing just goes crazy to the upside. Or sometimes it comes down a little bit, go up, and then come back down, and then go up. Some shenanigan along the way, of course. Market is going to make sure you're going to sweat a little bit. It's not going to make it easy. Bullish. Overall picture bullish. Short term, yeah, I don't know. It's tough to say in the short term. I mean, we got this gap area here on Netflix. So I think the short term, as long as we stay above that, you know, here, 1518, 500 in the short term. We stay above the short term bullish. Long term, 465. Give it some wiggle room. Give it some wiggle room here. Let it like make a lower low. Just so that market doesn't take your stop and then goes up without you. And then you can't even chase it anymore, right? Let's go to Google. So Google, you can see here, that's the pivot. That's the rising pivot here. I'll put another one there. Definitely a pivot there. We held that, right? So we still have higher lows in the overall picture. We got that low. We got this low, low, and low, right? Strategically, that low is definitely higher than this low, right? So this low is higher than this low. That's a higher low while having higher highs here, right? Lows, low, low, low. So we're still in an uptrend, looking at things more of a longer term. And the level I want to hold is, you know, this pivot right there, right? As long as we're staying above those pivot, it's bullish. You can see my long-term moving average doing its work, acting as support, bring it up. And those are good things that it came down, retest those long-term moving average on Google. I actually like Google better than some of these high flyers looking at things more longer term because Google actually had a proper correction. You know, something like Apple, I don't even think it even retested my long-term. Yeah, so you can see that's a long-term moving average, didn't retest. Amazon, my long-term moving average, didn't retest. Facebook, let's look at Facebook. Long-term moving average, didn't retest. Netflix, let's do Netflix. Yeah, my long-term moving average hasn't retested since that COVID decline Google, however, already retested 3 times. 3 times. Retested here, retest there. So Google actually had a more proper correction, right? What I'm saying is, if I'm going to hold things long term, I like Google better than some of these other guys that didn't have a proper correction. That doesn't mean in the short term, Google going to perform better than some of these other, because of some of the Facebook, Apple, Amazon, Netflix, they are a little bit more high flyer. They're going to have a little bit more buying pressure. A lot of people like to chase those, and so that's why they didn't come down. But it makes me feel like that Google will be a better investment choice looking at things long term, because it does have a more proper corrections along the way. It may not give you a huge up move, but it's not going to give you a huge down move either. I'm even like day like today, Apple's down 1.4, Amazon down 2%, Netflix down 2%, Google plus. It's because it had a proper corrections, so it's a little bit more solid, right? It's a little bit more solid. So long-term holding, I think I like Google better than the others. Others, you want to be a little bit more high maintenance with that. Makes a big move to the upside. You want to take some profit on that. Google, you can probably ride it and milk it for years. But in the short term, 1535, 1504 is a short-term place to hold. Despite the fact that S&P closed that gap today, well, Google actually held that gap. Apple also did too. So some of these large cap tech stocks holding up this gap area, and that's kind of looking more bullish, right? That's looking bullish. If they start to go, because this looked like, when I look at Google, that looks bullish. We're still above my short-term moving average there. I can even check. This is 65-minute. You guys remember 65-minute when I do spider analysis. So you get that. You can see here, when I look at 65-minute on Google, we're still above my short-term moving average. We're nowhere near the gap area. And so looking quite a bit of bullish there, even in the short term. So I think as I look at some of these large tech stocks, as they still look bullish, I think going into next week, overall market, you still want to give benefit of the doubt to the buyers next week in the overall market. Because if the tech stocks decided to bounce, it's going to bring other stocks with it. Let's go Tesla. So Tesla, we got this support, right? That's a long-term support. And then we got FAANGT. Definitely held it there and there and there. Right now, holding up on the short term. Everything is kind of set for bullish continuation. But I kind of feel like, because that looks like a nice base, that's a pretty prominent breakout level there, 460. It's looking too good. When things looking too pleasing to your eye, there's some kind of trap might be brewing. So something that I'm kind of a little bit concerned is this is a weekly chart on Tesla. Definitely we made higher high here on the price section. On my oscillator, we got the lower high. That's a bearish divergence on the weekly chart. But keep in mind, that's a weekly chart that it may take weeks before it plays out. I've seen it where it doesn't play out. It gets nullified if the oscillator goes right back up here. But we got a little bit of that kind of a bearish divergence there on the weekly chart on Tesla. And just the way it consolidated, 460 looks like it's that line in the sand, like get out, start going long above it. I don't like to take that kind of trade, not always. I take it once in a while, but I don't know if I would. Maybe it might work in the short term of things. If we do see a breakout, it may continue higher. It's just everybody's looking at them. This is a very prominent level, 460, and it's been holding up there. And maybe there are times where, so it's just one of those things where, are you willing to take that bad, breakout, and you think it's going to 600, go for it. But not everybody like this kind of setup. And so I think it's not bad if you've been long on Tesla at some of these levels, and you're already have some gains in it, and you're sitting on some of those gains. I don't think it's bad maybe going on a breakout that way. Even if this thing pulls back in, you're still green, right? If you just add a little bit. But yeah, it's a tough spot. Even though the 460 seems like that resistance, it looks like if we break above it, this thing could continue to move higher. Tough to say. Tough to say. It could work. It could be some kind of trap maybe in store. I don't know, and especially the weekly bearish divergence in the picture. I haven't traded in Tesla so long, so I don't, yeah, I mean, I've been kind of watching, but it's tough call here. Let's go to gold. But overall picture though, I mean, if you've been, again, what I would like is not trying to worry about where to enter here. I should be long already beforehand, and I'm just kind of sit back and relax. Well, if this thing goes up and fail, whatever, I'll just buy more. You know what I mean? Like, it will be better looking at it that way. So if you've been already long at like this 150, 200, and maybe 300, and you're kind of sitting back and see what this is going to do, then it's a good place because we're still in an uptrend. We got the support first of all. We got the fan line here, and it has a nice uptrend here, and it's been it's consolidated instead of tanking. It consolidated its gains, so it looks bullish, and it may continue higher. Only problem is if you're trying to find an entry up here, especially with that weekly bearish divergence in the picture, it's a little bit more difficult. You should have been already long before. Gold still grinding here. We still got that resistance going. My short-term moving average, my mid-term moving average is moving sideways now. It's trendless at this point. I like to see, I mean, I still kind of wondering, you know, I still want to go long on gold because I closed out all my longs here, up here when I went long before. And I like to see maybe just one drop to just shake some people out, create a little bit more panic before maybe I'm thinking about going long here. Let me just check out my other screens here. Yeah, it's still kind of a neutral ground in the short, you know, maybe short to mid term. Obviously, in the shorter term, we are falling down, but that could just be a bull flag before going higher. You know, we saw that bull flag here. We saw some kind of flag here. This could be a bull flag before continuing higher. Let's go to Bitcoin. I end the video with this. So Bitcoin made some progress since our last update last Friday. So now I'm going to move this here. So definitely this rising support held, right? That's a support there. We held that. Now the price staying above my short-term moving average is there. And we got that higher high in the short term. That's a good thing. What the grayscale Bitcoin needs to do, get up here and fill this gap. When the gap gets filled, it's gonna act as resistance and then pull back, create higher low, because we got the low, 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 right? Low, higher low, clear higher low, and then get up. Or if grayscale Bitcoin feels really, you know, good about, the buyers are feeling really confident, gap it up here. That would be the best case scenario. Gap this up to about $14 or 14, 17 or so. Make this into an island bottom, and then you don't even have to worry about that down gap resistance. Just jump over that fence, turn this into an island. Let's go to 15, 18. I'm still long here. I actually went long here. I bought more here, and then I got more here. So I've been actually accumulating in this vicinity on that. So there you have it. Just complete recap: S&P, VIX, FAANGT, stocks, gold, Bitcoin. Overall, as I looked at S&P, as I looked at VIX, as I looked at you know, some of these tech stocks here, overall posture should continue to be bullish in the overall picture. We're talking midterm picture. In the short term, there will be some up and downs. There will be some fluctuations. You're going to have some traps and shenanigans and head fakes, and VIX is going to go up and come down. But I think overall, I think we're going to continue to march higher to the upside. And I would recommend you to focus on the more longer term picture and not get too overly emotional on a day or two of decline in the market, because without day or two decline in the market, it's not a market. You can see there's red candles. I mean, the market does not go straight up. So you want to understand the big picture. You want to understand the, you know, what kind of trend are we in the longer term picture? What kind of trend are we in the midterm picture? What kind of trend are we in the short term picture? And then with that, you can kind of, you know, adjust or you know, position yourself accordingly as you navigate this market. I'll come back for you guys not tomorrow, but Monday and we'll reassess the situation on the S&P 500. We'll go from there. Enjoy your weekend, and good luck trading next week.